Welcome back to another weekly price action journal review. It's kind of a bit of a mouthful, but hopefully it kind of made sense. So as always, I'm trying to deliver these now more on time. Sunday, Saturday, Sunday, either one's fine. But I just wanted to deliver this earlier, prior to the new weekly candle starting to print, to kind of see the observations that I had for the week and so on and so forth. Now, I should preface my comments by saying that this past week that has gone, I didn't place any trades. It was the US elections, and to be perfectly honest, they occur once every 4 years or so. So to give myself a week off, an enforced week off by the markets, it's actually not a bad thing at all. Yes, there are probably many sort of gurus out there who trade and said, "Oh, look at me, I took this trade, I took this trade." I mean, the reality is the volatility in the market, although we pride ourselves on being able to determine the predictability of the market, my view was, what's the point? If you get an opportunity to take a week off, why not? Recharge the batteries and so on. But anyway, that does not mean that the processes stop. And that part is important. And one of those processes is the weekly price action journal. So here we are. I'm going to run through, shouldn't be here too long. I'm going to run through my observations, key takeaways, and hopefully you guys will spot some things which are important to yourselves, or maybe there's some things that I cover which you deem important or useful that you wish to add to your training plans and your models. So with that being said, I'm going to take a quick sip of coffee, and then we're going to get straight into it. Okay, so first things first, heading into this week, as I said, this was the week of the US elections. So I had noted how the previous week here had traded down into the BISI weekly and rejected, as we can see here. Now, yes, the rejection is not huge, but nonetheless, the bodies of the candle was not closing inside of that BISI weekly. So because we had a rejection, I wanted to see if we had a lower time frame. So predominantly the daily, possibly the 4 hour, the H4, the 4 hourly, but ideally the daily, whether there was any cracking correlation at the lows to support the idea of higher prices, because institutional order flow, as far as I'm concerned, for the weekly is still bullish. It has not changed yet. So I wanted to see, do we have any confirmation that the market is in fact wanting to trade higher to the old high weekly? Now, partly being that I was anticipating a Trump victory, my view was that would likely lead to bullishness injected into the market as a response. But needless to say, going with the premise of the market being coordinated, if you will, in other terms, we could say algorithmic. My view was, if we see a form of high time frame cracking correlation at the lows, that will support, that will reintroduce institutional order flow back into the market, and we could see a move for higher prices. Now, you get all of these traders who are like, "Oh, look at me, I determine the market through my crystal ball," and all of this sort of good stuff. My view is really simple. I like to trade based on scenarios. If this, I do that. If that, I do X, right? So my view here was, if we see a cracking correlation on the daily, then the likelihood is, then the likelihood is, oh, this should be down here. Do apologize. Then the likelihood is we're seeing higher prices. We see a cracking correlation. But if the market on the daily time frame was to trade down below and close below, then the likelihood is we're going to see lower prices and target this low here. Especially if we got a weekly close below here, then we could see that. So I like to present different scenarios in terms of what could happen, right? And then I react to those things. I'm not here going to sit here and say, well, I believe X, Y, and Z, or the usual gun to my head this and gun to my head that. I'm not doing that. This is a business. Part of business in terms of strategy is strategizing for different eventualities. If you think of sport, for instance, Formula One is a perfect example. Um, Teams are often calculating different eventualities and strategizing. If this happens, then we do this, and if that happens, then we do that. Trading's no different, and that's how I operate. So all of these people who want to be correct in every instance, good for them. I'm not going to knock them. Good for them. That's just not how I operate, and I don't necessarily think it's a healthy way to operate, because I think you should. It's not about saying, "Oh, I was right. Look, it went down," and I was right. It went up. It's about, what are you looking for to determine when I'm going to pivot? There's got to be certain criteria in the market which present themselves, and then when you see it, you go, okay. It doesn't necessarily mean I'm going to be fully committed to a certain direction, but that's interesting. That's of concern, or that needs further investigation before I do anything. I'm going to sit on the sidelines till I see further confirmation, what have you. So for me, as I said, I saw this rejection. I wanted to see, we're still in the upper half of the BISI. I wanted to see, do we get a high time frame cracking correlation at the lows on the daily, maybe the 4 hour, to support the idea of higher prices, targeting the old high weekly. Okay. And ultimately that would then present the internal to external range, so internal range liquidity pool to external range liquidity, to the all-time highs for NQ. Okay, so that's how I was interpreting that. Okay, so just like to keep things clean. Okay, so now onto the daily. That's what we saw. So as we can see here, the market traded below. If we look at this here, so that was last week. The market traded below the true month open. So that's important for me. That is signifying, to an extent, I don't want to sit here and say it's an absolute, but to me, in terms of how I look and view the market, we are in an oversold position here. This is ideal for longs. We're below the true month open. Okay, so as I said, it sets the stage for high probability longs. So the market traded down, displaced down into the BISI weekly, and then I noted the high time frame cracking correlation here. Okay, with NQ. NQ formed a higher low. Okay, so that set the stage for higher prices. Okay, then following the US election, so here, going into this day, and in part the result, I always felt that a Trump win would have a positive impact on the stock market immediately anyway, as if you want, as an overreaction. So the market displaced higher, and ultimately displaced higher through the old high weekly. Through the old high weekly, and setting new all-time highs. Okay. So the initial target was this old high Q3, old high of Q3. That was the initial target. If we saw this support coming into play, the initial target would have been here, and then ultimately here. And as you can see, the delivery, it was quick, and again, largely due to the central bank manipulation based off of the US elections. Okay. So for me, although this would have presented a model down here potentially, I didn't engage because, as I said, I went in with the premise that I'm not trading this week. So although I noted this, it wasn't going to compel me to place risk into the market, because at the end of the day, the US elections are extremely volatile. And despite the fact that, yes, I, trust my models and all of that sort of good stuff, I had gone in with the premise for the week: I am not going to trade this week. I'm going to take the week off. I'm going to tape read if needed. Which, to be perfectly honest, I didn't do a lot of tape reading this week. I did a fair bit of back testing, so certainly check out, other videos on my channel for that. But for me, I wasn't compelled, but I was still focused during the week on my trading processes, end of day, my daily price action journals, entries, and so on and so forth. And again, yes, I have spoken about that. I will be introducing my daily price action journals, much like this, into the channel, because, as I said, the 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 fundamental the fundamental premise, you could say, bear with me. Sorry about that. My I was going weird. Okay, yeah, sorry. The fundamental premise of my channel is to, build your trading success through consistent journaling. So it's only imperative that at some point in time I start to introduce my daily price action journals, and showcase how you leverage improvement through the art of journaling through that prism, as well as the art of journaling through the weekly prism. Um, I think both of them complement each other, and they both drive tremendous opportunities to learn. So, as I said, despite that, there was a potential model down here, but that for me was not going to be nothing was going to be taken this week, irrespective of how I was looking at the market. Was not going to happen. So anyway, so that was the weekly commentary. The daily commentary. So dropping down to the 4 hour, let's just try and get this looking pretty good. That will not do. Okay, that will do. Okay, so following on from the daily commentary, and as highlighted, so I typically allow Monday's price action to play out. I don't trade on Mondays. I like to see what Mondays are doing. The only time I will consider Monday, and even still, I rarely ever will engage the market on Monday, is if we have not FOMC. If we had NFP on Friday, then naturally you want to focus your trading activities on Monday, Tuesday, Wednesday. But I find that Tuesday and Wednesday present the highest probability of a positive trade output. So I focus on Tuesday and Wednesday. But don't get me wrong, there are many who will take the opportunity to trade on Monday. I'm not saying don't trade on Mondays. So please don't, take that snippet away and amplify it. I'm merely saying that for me personally, I like to see Monday's price action play out, then I look to engage Tuesday, Wednesday, Thursday. A bit of coffee. Okay. So ultimately, I want Monday's price action to play out so I can determine where the new true week open is going to form, that key price level. So, however, as we've noted on the daily time frame commentary, this high time frame SMT formed prior to Monday. So we're looking here Thursday, Friday, and into Monday. So the true week open hadn't formed yet. Okay. So this occurred during Monday's price action, and this framework in itself, after running this old low H4, set the stage for higher prices if it's confirmed. Okay, and it would set the stage for one of my models. But again, as I mentioned, not trading this week. So heading into Tuesday, the market began to move higher. So if we head into Tuesday now, as we can see, the market's spooling, we've got consolidation, then bang, the market expands higher here. And ultimately, we confirm this. Let's just do that. We confirm this high probability order block, bullish order block on the H4 time frame, whilst also purging the previous day's high for Q1. And then we see the market aggressively move higher, breakaway gap after breakaway gap after breakaway gap, potential measuring gap here as well. Again, terms, ICT terms, I don't particularly use them per se. Certain things I use and I implement within my models because I think they're useful, but things like measuring gaps and stuff like that, I personally don't waste my time with that sort of stuff. But you know, there will be others out there who are far more algorithmic who will, and again, kudos to those people who utilize those things and make it work for them. Okay, so yeah, so the market began to move higher, confirmed the bullish order block. Yep. And the initial target was obviously this high here, which was a previous week high. And then onto this old high here, which is ultimately the all-time highs. So as you can see, the market completely displaced through. We had a small retracement here before the market continued higher, and then we have this continuous repricing of higher prices before we have a bullish close. Well, I say bullish close. We close back into this candle, but ultimately, look at the range. Look at the range. That's extremely bullish for the week. Okay, so not a lot of moving parts here on the 4 hour. It's pretty simple stuff in terms of how I look at the market. The moment that this went in and the H4 order block was confirmed, I'm looking at this market now to certainly be targeting here and pretty likely to be targeting this high. That's how I'm envisaging the market. And the moment we have these breakaway gaps, that's telling me this market is strong to the upside. So let's move down to the hourly. Let's try and get a, let's see what we can do. Get something like that. Okay, that'll do. Okay. So again, Monday, we see the market open, forms the high of the day here, and then, you know, pretty much it's consolidating but sort of repricing and trending lower. Pricing trending lower. We've got a London low here that gets purged, and the market ultimately trades lower, takes out this H4 old low, which is where we see the second swing point for the high time frame SMT before the market then goes back into a form of consolidation. We then see true week open, key price level is confirmed, and the market just stays in this consolidation all the way into Tuesday. Okay, so then when we head into Tuesday, the market opens in this tight consolidation between, you could essentially say, the London low and London high, if you will, heading into the New York session. We have low time frame SMT down here with YM, which sets the stage for potential higher prices. So again, it's important to note that although we have this low time frame SMT here, there's no model for me here. For a number of different factors. The fact that the high time frame framework, as far as I'm concerned, is not confirmed yet until the 4 hour order block has been established. So for me, there's nothing to do here, despite the identification of the low time frame SMT, the market expanding higher. I'm not looking at anything at this point in time to trade. And like I said, I wasn't trading this week anyway, but if I was looking just purely on the merits of a model, I'm not looking to engage the market. So the market then displaces higher through the previous day's high, heading towards ultimately the higher time frame draw on liquidity. If we're looking at Tuesday and how the market's just expanding higher, we're sort of getting extremely close to that before the close of the day, and we head into the new trading day. So we then head into Wednesday. If we said sort of commence from here, but if we open from 12 midnight, the market ultimately opens, trades below the true day open, and into this busy H1 where the market finds support. Yep, where the market finds the support, and ultimately we can see the market displacing aggressively higher, where we ultimately set the London high, but this is also a H4 high. So I will always take the highest time frame, price level between the two. So if we had a London high, which we could see on the hourly, but we've got an old high which we can see on the H4, I'll always take the H4, because that to me represents more of a key liquidity pool. Okay, because we're looking at time, and I want to see, in reference to time, how long has that liquidity pool been established. If I'm looking at it from an hourly time frame, then I'm looking at it as, okay, well, this is a low time frame liquidity pool because we're dealing in matters of hours. But the moment we stretch into the 4 hour and above, okay, now this must be a far more liquid filled liquidity pool that the market would like to target. So ultimately we create this old high. At one point, yes, it would have been the buy side liquidity pool for London, but then over the course of a few hours, this becomes an old high H4. The market consolidates here and then starts to trend lower before purging, which is key, this SSL H1, whilst also trading down into this busy H1. Okay, this confirmed here between this low and this low time frame SMT with NQ. Okay, we had this PDA SMT here. Okay, and then ultimately set the stage for higher prices for the Forever model higher. Shout out to Sniper for the Forever model. I have amended it slightly for my requirements, but the premise of the model is brilliant. Shout out to Sniper. You should go check out his channel. If anyone tunes into mine and they don't know about Sniper, go look Sniper's channel, Sniper with a $sign FX. Some really good content, especially around his Forever model, which is a simple but highly effective model that anyone can really put the time in and study and yield the benefits from it. Okay, so Forever model seeking high prices. Yeah. So why was this model here high probability in my mind? Because I always look at my models are all as high probability, right? And the reason being is because the model was supported by high time frame framework being bullish. We already had this high time frame, which could have been a model in itself, high time frame framework at the lows, confirmed by the H4. Well, actually no, that is the H1 order block, and then we got the H4. H4 order block. We then, if we go back to the 4 hour time frame, we see all of these unfilled fair value gaps. That's indicating that the market's bullish. Then we have this daily BPR formed, which again is indicating bullishness. So we've got this H4 bullish framework in play. Therefore, although we have reached the high time frame draw on liquidity, now that could be a situation where you determine, okay, well, I'm going to move to the sidelines. But my point being is there's no context up here to sell at any point yet. Therefore, the likelihood is that the market is going to continue supporting higher prices. So if in doubt, we still want to look for confirmation and certain confluences to support the fact that the market is going to go higher. And this is where your models come into play. So for me, this model is specific to this area of price. So once we see that, ultimately, with the high time frame framework, there was no higher time frame framework in play for the reversal at that point in time. That's why this was still a factor of seeing higher prices. So ultimately, that delivered with H4 order flow being bullish and H1 order flow being bullish, and the market continued to reprice higher before the close of the day. Yep. And so then we head into Thursday, where the market opened and consolidated, as we can see here at the true day open. Yep. Setting the London low here. I haven't marked it up, but the London low's there. And then ultimately it continues to consolidate before we get into what I call my trading execution window, which is New York PM session. High impact news driver. The market displaces higher. Okay. So the market displaces higher, and goes on to set the high of the day here, right? And so then we head into Friday, where the market opened and consolidated at the true day open, as we can see above it, below, before. So here we've opened, true day open, we've consolidated around, and then the market has dropped lower, purging liquidity, setting the low of the day, which all occurred during the London session, before displacing higher, purging this relative equal highs here, which was an obvious draw on liquidity, and setting the new all-time highs before just a slight retracement at the end. So that is pretty much my weekly analysis. That's how I looked at the market. There wasn't going to be too much because, again, we had, the key high impact news driver where we could determine that central bank manipulation could take place. So, with that being said, there's no reason to engage the market. Certainly I wasn't going to engage the market. So it was going to be very simple in terms of outlook during the week, in terms of what the market was going to do. And that's ultimately how it delivered. Now, headed into next week and so on, now we can start getting back in sync with the market, and determine, is the market going to conduct a huge sell-off at some point in time? Yes, that's probably likely. But again, we've got to wait for the high time frame framework to present itself to confirm that lower prices are likely, that we can get in tune with institutional order flow, and then we can ride the coattails to support lower prices if it's warranted. If not, we continue. If high time frame framework supports bullish price action, then that's exactly what we do. So the next stage for everybody is to bullet point your key takeaways from the week. What you've observed, it may be from something that I've said during this video, maybe something that you've observed whilst you've been following along and putting your own annotations on the chart based on how you view the market, your strategies, your models, your trading plan, and so on and so forth. So you want to put some takeaways in play. Some of those takeaways are going to lead to amendments, adjustments, or even deletions from your models, because maybe there are certain things which have been answered, and you're kind of like, actually, I don't need that anymore, because I actually cover this here. Simplicity is key. You don't want too many moving objects in your trading plan, and it needs, in my opinion, to be a rules-based system. That rules-based system will remove any anxiety you will have when it's time to execute, because you're following your tried and trusted rules-based system that you have back tested and can confirm you have an edge and it is profitable. So hopefully that there was something in there for you guys to take away. It was an interesting week, as I said, US elections. So hopefully next week we're going to get back into the more run-of-the-mill price delivery. I don't want to, guarantee that that's how it is, but we've obviously got a US bank holiday on Monday, and then we've got CPI on Wednesday, and then PPI on on Thursday, and I think Fed Chair Powell's also speaking if he's still in a job. We'll see what happens there. But hopefully, as I said, you guys have taken something away from this. Hopefully you've enjoyed the content. Please give it a thumbs up and a like if you would be so kind. And hey, why not subscribe to the channel? You know, I'm sure there'll be some content now or down the line that you'll find useful, and it sort of like speaks to you and provides value and so on. So anyway, hopefully you've enjoyed, taken something away, and I will catch you guys in the next one.